Now, Mansard Insurance has recorded a gross premium rise of 24% to 12.5 billion naira for full year 2012, while net premium increased 17%. Now, profit after tax rose 66% to 1.6 billion, which is boosted by a 190% increase in investment income. Now, profit after tax for Q1, meanwhile, increased 34% to 580 million on the back of a 19% rise in net premium. Now, joining us in the studio to discuss the company's result is the CFO of Mansard Insurance, Rashidat Adebisi. Thanks for joining me today, Rashidat.
Hi, thank you. Good afternoon.
Let's go straight into those results. A few takeaways. We have a decline in gross premiums in Q1, but net premiums rose. Now, this, of course, implies that your company is reducing the percentage of the risk that it carries over to be reinsured. So is this a trend that we can anticipate going forward?
It's actually a combination of two things. We have the reduction in premium coming in for the no premium, no cover being implemented in 2013. So you still have some corporate organizations not taking up their insurance premiums yet. However, insurance premiums are going up. Yes, there's some increase in retention, so reduction in reinsurance as we grow our retail portfolio as a whole. So that has contributed largely to the...
Now, I mean, as you say, you mentioned that no premium, no cover policy. So give us an update on the impact. How much growth is this driving?
As anticipated, it's not actually driving growth in the short term. We actually expected a reduction in premiums at the beginning as companies realign their insurance risk buying process, with actual cash outflows. In the past, they will have actually insured without paying at first and then pay installmentally over the whole year. However, the regulators have ensured that they actually pay up front, and you can only accept cover from when you receive payments. So we see a bit of realignment, a better spread of insurance across the year. So the cycle in Nigeria itself will actually more or less reset this year, but it should balance out in 2014.
Okay, now let's talk a bit about your growth in net premiums. What sectors are you seeing the most growth?
Exciting growth in retail from motor. We expect a lot more from that. The National Insurance Database is ensuring the reduction of fake insurance policies, and so we're seeing a lot of benefit of that. Increase in advertising itself from some of our award-winning adverts has also increased interest across the industry, so we're seeing a lot more uptake from there. And then life insurance itself is actually on the growth. But corporate side is really oil and energy and some of the key risks being put on cover from group life also.
Now, it would be good to know your expectations from investment income going forward. We've seen a consistent growth. However, now that we're beginning to see a decline in fixed income yields, what are your expectations going forward?
There's still some exciting opportunities in the equity space, albeit very cautiously that we're going in there. But we are actually positioned to take any situation as it comes along. We anticipate some improvements in the fixed income stream of income, and that is coming in already in Q2. So our investments are really well laddered. So we do expect that we'll still see decent growth in 2013 as a whole.
Now, we've seen claims on the rise over the past 2 years. Yes. I think this is something that we're seeing with many other insurance. Is there a reason for this?
Oh, it's really the insurance cycle. You will definitely have the up times when you have increased claims, and then you also have the lower cycles when the insurance sort of cycle is sort of lower. We have lower claims. So we've had some large claims, oil and energy, and in the corporate sector in the last couple of years. We expect some level of reduction as we go towards the end of 2013, and perhaps some better reduction too in 2014. But we're still lower than the world ratios anyway.
But what are your expectations going forward?
We still see it in the similar range, slight growth, but nothing scary.
Let's talk a bit about local content policy.
Yes.
To what extent is this driving growth for your company and other insurance?
It really is driving growth in the Nigerian insurance industry. We grew oil and energy by 30% last year, also on a double-digit growth in 2011. So we still expect double-digit growth in 2013 and even going into 2014 as power comes into the whole mix.
Now, why don't you give us an update on your company's retail strategy?
Yes. Okay, retail is growing. We've actually increased the number of outlets we have. We are in the range of almost about 130 odd outlets now across the country. We're seeing a lot more alternative payment opportunities opening up. So we created channels such as mobile payments. We also have scratch card payments for our clients, so you can actually access insurance from anywhere in Nigeria. We've grown considerably in terms of the feet on the street. Retail itself has contributed 28% in 2012 compared to 23% in 2011 as a whole. So it's definitely increasing contribution. We have new agency offices all over Lagos, and it's increased now to about 11. And we're seeing activity there with a 78% growth in 2012.
Okay, now lastly, are you planning to acquire any other insurance companies?
Well, I don't think I can actually answer that question now. There could be opportunities, but nothing actually on the horizon. But we plan to grow the business and deliver value to all our stakeholders.